Welcome to my YouTube channel, CMA Focus. This channel is exclusively for intermediate, CMA intermediate students. Today, I'm going to discuss about accounting approaches. We have two types of approaches. One is British approach and American approach. British approach is also known as traditional approach and double entry system. And American approach is also known as modern approach. Today we are going to discuss British approach or traditional approach or double entry system. And I told you that we record all the transactions using debit and credit rules. Before applying these rules, we need to know different types of transactions that may occur in business concern. We have three types of transactions. Transactions related to assets, transactions related to persons, transactions related to incomes and expenses. In British approach, we have divided the entire transactions into three types, right? One is transactions related to assets, transactions related to persons, transactions related to incomes and expenses. And each transaction will be recorded in a different accounts. So to record these transactions, we have three types of accounts. One is real account, then we have personal account and nominal account. Okay, in real account, we record all the transactions related to assets. In personal account, we record all the transactions related to persons. And in nominal account, we record all the transactions related to incomes and expenses. Right. Now, and for each account, we have separate debit and credit rules. Right. Then, suppose we have real account rule. We can first learn real account rules. Real account rule: debit what comes in, credit what goes out. Actually, accounting approaches means so when to write one particular transaction on the debit side or when to write that particular transaction on the credit side. So based on these rules, we decide the side of the account, or whether it is a debit side or credit side. So suppose the transactions related to real assets, it comes under real account. So we apply the rule debit what comes in, credit what goes out. Suppose if the transactions related to persons, we apply the rule debit the receiver and credit the giver. Suppose if the transactions related to incomes and expenses, so we record such transactions in nominal account. Debit all expenses and credit all incomes and gains. So these rules we have to memorize, right? And in the next chapter, in the next video, I will be discussing how we can apply these rules in the transactions. And I am making use of the transactions, or I am making use of the illustrations given in our institute textbook. I will explaining this one by one in the next video. If you like this video, please support me by subscribing my channel, and I'll be putting all the subjects, all the subjects in this in this channel, and it would be very helpful for the students. Thank you. Illustration 5. Ascertain the debit credit under British approach or double entry system. Take previous illustration. That is illustration 4. So the first journal entry is first transaction is started business with capital, and in this textbook solution they have given 4 steps, right? And let me name each step, like accounts involved, first step; nature of accounts, second step; applicable rules, third step; then debit and credit, fourth step, right? Now let's journalize each transaction. First transaction, started business with capital. What is the first step? We need to identify how many accounts involved. We know that when we start business with the capital, cash is involved. Of course, capital also involved. Actually, capital is a representative personal account, right? Capital represents the owner of the business. The owner invested some money into the business. So we have 2 accounts involved in this transaction. One is capital, so yes, one is capital and the other is cash, right? And so cash comes under real account because cash is an asset. So it's a transaction related to asset, so it has to come under real account. Capital is a personal account because it represents the owner of the business, so it is a personal account, so it has to come under personal account, right? So how we can generalize accounts involved: cash and capital. Nature of accounts: cash is real and capital is personal. What is the rule of real account? Debit what comes in. So when we start business, the cash is coming into the business, so comes in. Debit what comes in. So cash has to be debited. The capital represents the owner. The owner is giving money into to the business. So owner is the giver of the cash, so giver should be credited, right? This is the first journal entry, right? The second journal entry, bought goods for cash, right? So what is the first step? We need to know how many accounts involved here. Here goods account also involved, and cash also involved. Bought goods for cash. So in this transaction, we need to understand one thing. Whenever goods is given, we need to understand what is the type of the goods account. So we have actually 4 types of goods account: purchase account, purchase returns account, sales account, sales returns account, right? So goods account can be of 4 types. One is purchase account, purchase returns account, sales account, sales returns account. In the transaction, goods is given, then we need to identify in which type of account it is. Like bought goods for cash. So here bought goods, it means purchased goods. So it's a purchase account, right? Cash also involved, so cash and purchase account is involved. Cash, you know that it's a real account, it's an asset, so it comes on real account. And purchase, when you purchase goods, it is an expense, right? Under traditional approach, it is considered as an expense, so it comes under nominal account. So transactions related to expenses and incomes will come under nominal account, right? So how we can generalize? Here accounts involved: cash and cash and purchase. Nature of accounts: real and nominal. And when you purchase goods, cash is going out of the business, so it has to go out, so it has to credit what goes out. What is the rule of real account? Debit what comes in, credit what goes out. Here cash is going out of the business, so it has to be credited. And purchase is an expense. So debit all expenses and losses. That is the nominal account rule. So it has to be debited. Purchase account has to be debited. Right. Now the third one, sold goods for cash. I already told you, whenever goods is given, we need to know in which type of goods it is, right? In which type of goods account it is. So we know that sold goods, so it is sales account, right? So when you how many accounts involved here? Cash also involved, because we are selling goods for cash, so cash also involved, and sales account also involved. So sales is sales is an income, so it has to come under nominal account, because all expenses and incomes has to come under nominal account, right? So third one, cash and sales. Nature of accounts, real and nominal. So when you sell goods, cash comes into the business. So cash should be debited, and sales is an income. Income should be credited according to the nominal rules. Credit all incomes and gains, right? Then we have paid salary. Fourth one, paid salary. How many accounts involved? Paid salary. So when you pay salary, cash is going out of the business, so cash is involved, and salary is an expense, so salary also involved, right? How we can generalize this? So accounts involved, cash and salary. Cash comes under real account, salary comes under nominal account. So cash, when you pay salary, cash is going out of the business, so what goes out should be credited, debit, okay, credited, and the salary is an expense should be debited, right, according to the rules. Then the fifth one, received interest on investment. Here received interest, we are receiving the interest, so cash is coming into the business. So interest here is an income, because we are receiving the interest, right? So it is an income. So cash also involved, interest also involved. Cash comes under real account, interest comes under nominal account. So how we can generalize this? Sorry. How we can generalize this? So cash and interest accounts involved, and nature of accounts is real and nominal. So when we receive interest, cash comes into the business. So what comes into the business should be debited, and interest is an income. Income should be credited, right? So the sixth one, bought goods. So I hope you understood this problem, and if you like, please support me by subscribing my channel. You can expect more videos related to all the subjects in CMA. Thank you.